Hey, what's going on, guys? This is Dan French, your local loan officer here in Las Vegas. Want to give you a quick update on what's happening with the markets, also what's happening with rates and all this news that's come out. It's Fed's week. We've talked about this week being important, and a lot of consumers and people I work with, including people on the sidelines, really wanted to see what was going to happen this week. Why is this so important? Well, if you look at what's going on in the economy, we see a lot of data that says our economy is slowing down. Now, we also see here in Las Vegas, we see an appreciation, or homes that were appreciating. New home sales and home sales in general were going up, and we've seen this decline a little bit. So the big thing that was going on was, what is the Fed going to do? Are they going to cut rates? How much are they going to cut? And why is this so important? Well, if you look at what they did, Fed Powell came out and stated that they were going to attempt to cut rates potentially, and made some dovish comments, and it was backed up by really, in my opinion, weakening economy. You have inflation report, which is tame, but they're still looking at that. And you look at overall what the economy is doing, they are seeing some signs of regression. And so I think what they're trying to do with this is they're stimulating the economy a little bit. How do they do that? Well, if you look at what mortgage rates are long-term bonds. They're not short-term bonds. So who's affected by the Fed lowering rates or reducing it by 25 basis points or a quarter of a point? Well, everybody's affected. Why is that? Well, this will affect, you got your student loans, your car loans, your credit cards. The interest that's on these loans and on these credit cards and all of these short-term bonds is less. So what does that do for you as a consumer? Well, it'll open up your pocketbooks a little bit. You now have a little bit more to put out every month on other things that you might want to buy, which helps gross domestic product. It helps you with purchasing goods and services. It also helps, business owners, especially, self-employed or sole proprietor or people that are running their own business. It really supports all that, so it really will drive the economy. Now, this does not have an impact directly on mortgage rates. So the question that comes out is, are we overdue for a recession? Well, if you look at the weakening numbers that we've seen, I do believe that we are in somewhat of a recession or regression at this time. A lot of stuff and data that's come out is stated that the economy's not doing well. I mean, this is the first time they cut rates in 11 years. So this is back when we had, the crisis, the home crisis, 2008, 2009, really started in 2006. So you look at all this information that's coming out, and it is important because you want to pay attention to this. Weakening economy, you got the tariff news and some of the news that comes out with that. A lot of stuff that's going on in the economy and in the world is really affecting us here, and I think that's what you want to pay attention to. Now, with the election coming up, and with maybe Trump, having supporters, it will hopefully keep the economy stable. And you'll see that we're always going through an up and down cycle. Now, this cycle is starting to come down a bit, and so everybody was saying, well, what is happening with rates? And we ended up cutting the rates by a quarter of a point. It did not have a direct impact, but this could have a direct impact on rates long term. Somebody came up to me and said, are we in a recession? I don't know. I think we're more of in a regression. I don't know about a recession. They also said, is the economy going to collapse? Well, I think you got to have a little bit more data to support that. Right now we see home prices still stabilized. I mean, yes, they're coming down here in Las Vegas, but overall they've stabilized. Rates are low, and they just cut rates. So I think they're trying to, stop the bleeding there. So could rates get back down to 3 and 3.5%? Possibly. Could they start buying into quantitative easing again? Maybe so. I mean, I think the Fed's kind of figured out how they can manipulate the market a little bit and really keep us from really going underwater. It doesn't mean that we're we're not out of the woods here, if you want to call it, because we're still, 22, 23 trillion dollars in debt, I believe. And we all know that that's important. So I think the Fed's figured it out on how to keep sustainability happening. And you look at the rate cut, it really is going to help a lot of consumers out there to spend more money. And we really need that if the economy is going to stabilize itself and continue down this direction. We've seen a lot of growth. You see a lot of things around Las Vegas happening. And so the impact that it had when they did this quarter of a point, it really didn't change rates much at all. Today we had some tariff news come out, and that did actually help rates. So right now we're a little bit better. But the rates, when all of this happened and occurred, rates were not, they did not have a huge impact on them. So look for the long term. If you look at long-term rates, potentially we're at the low threes, maybe 3.5. That could happen. It doesn't mean it's happening now, but I want you guys to continue to monitor what the economic news is. Like I told you, what does affect mortgage rates? Long-term bonds, geopolitical news, inflation report, jobs report, economic data, global information, any negative or positive news. These things do affect how investors trade their money and how interest rates are actually, being looked at, and also the direction and trend of interest rates. So if you guys have any questions, reach out to me. You can always reach me anytime, and we're going to continue to put out educational videos. Please comment in the section below. I'm trying to put information out to make you guys smarter out there looking for homes, getting into loans, and